Breaking news for Canadian retirees. 2026 benefit rules are catching seniors off guard. A single income mistake could reduce or stop your OAS and GIS, putting up to $1,150 a month at risk right now. This update affects CPP, OAS, and GIS. In the next few minutes, I'll explain who qualifies for the full combined payment, what the 2026 rules actually say, and how to protect every dollar you're entitled to. Welcome, everyone. We're going to be tackling the critical updates to Canada's retirement benefits for 2026. Let's forget the confusing government websites and all the financial jargon. My promise to you is simple. By the end of this video, you'll know exactly what makes up this $1,150 monthly payment, who gets it, and the precise steps to take to secure your benefits. We'll cover old age security, OAS. We'll pull back the curtain on the Guaranteed Income Supplement, GIS, which is where the real money is for many people. And I'll give you a clear, actionable checklist you can use. This is the information you need to protect your financial future. Let's jump in. What is the $1,850 a month payment? So what is this $1,850 a month payment we're talking about? It isn't one single check. It's a combination of two different federal programs, Old Age Security, OAS, and the Guaranteed Income Supplement, GIS. It's so important to understand that these are two separate payments with two different sets of rules. First, you've got the Old Age Security Pension. Think of this as the foundation of your government retirement income. For the first quarter of 2026, the maximum monthly OAS payment for someone aged 65 to 74 is projected to be around $742.31. Second, and this is the part you really need to pay attention to, is the Guaranteed Income Supplement, or GIS. This is a tax-free monthly payment for low-income seniors who are already getting OAS. For a single person in 2026, the maximum GIS payment is projected to hit about $1,108.74 per month. Now, let's do the math. You take the maximum OAS for someone under 75, $742.31, and add the maximum GIS for a single person, $1,108.74, and you get a total of $1,151.05 a month. That's where our $1,850 figure comes from. It's the combined total of both benefits for a Canadian senior who qualifies for the absolute maximum. Of course, these payments go up with inflation. For 2026, benefits are getting a cost of living adjustment to help your money keep up with rising prices. But getting this full amount isn't automatic. It all comes down to eligibility, and especially those tricky rules around your income. First up, understanding old age security, OAS, for 2026. Let's talk about the first piece of the puzzle, old age security. To get OAS, you need to be 65 or older and have lived in Canada for at least 10 years after you turned 18. To get the full pension, the benefit is calculated based on having lived in Canada for 40 years after age 18. If you've lived here for less time, you'll receive a partial, prorated pension. And here's something else to know. OAS payments aren't the same for everyone. Back in July 2022, the government permanently increased OAS by 10% for seniors aged 75 and over. This means for 2026, while a 66-year-old might get a maximum of $742.31, a 76-year-old could get up to $816.54 each month. That's a big difference that really adds up. But the most important part of OAS to watch out for is the clawback, which is officially called the OAS recovery tax. This is where the government starts taking back your OAS pension if your income gets too high. The clawback for 2026 payments starts when your 2025 net income goes above a certain threshold. For context, the threshold based on 2024 income was $90,997, but this number will be higher for 2026 due to inflation. For every dollar you make above that threshold, your OAS is reduced by 15 cents. If your income is high enough, your entire OAS pension can be clawed back to zero. For the 2026 benefit year, OAS is projected to be completely eliminated for someone aged 65 to 74 once their income hits around $148,451. This clawback trips up so many people. A big RRSP withdrawal, selling a second property, or even some good investment returns can push your income over the limit and shrink your pension payment without you even realizing it. The key to that, $1,150, the Guaranteed Income Supplement, GIS. If you want to get close to that $1,350 a month figure, the Guaranteed Income Supplement, or GIS, is the key. This is where the most significant financial support can come from, but it's also the most misunderstood part of the system. The GIS is a tax-free monthly payment for OAS recipients with low income. You have to be receiving OAS to even be considered for GIS. To qualify in 2026 as a single person, your income from the previous year has to be below the cutoff, which is projected to be around $22,188. And remember, this income limit does not include your OAS payments. Here's the golden rule of GIS you can't forget. For roughly every $2 of other income you have, your GIS benefit is reduced by $1. This is why managing where your money comes from in retirement is so incredibly important. Let's look at an example. Imagine a senior named Susan. She's single, 66, and gets the full OAS pension. In 2025, her only other income was a small CPP payment of $6,000 for the year. Because her income is well below the GIS threshold, she would get a large GIS payment on top of her OAS, likely bringing her very close to that $1,850 a month total. Now think about David. He also gets full OAS, but in 2025, he decided to pull a lump sum of $20,000 from his RRSP to buy a car. That $20,000 withdrawal is counted as income. Because of that one decision, his GIS payment for the next year will be slashed by about $10,000 over the year. He lost thousands in tax-free benefits just because of where he took the money from. If he had that same $20,000 in a tax-free savings account, TFSA, he could have withdrawn it with zero impact on his GIS. This is exactly the kind of costly mistake we talked about at the beginning. Critical 2026 updates and common mistakes. Let's recap the key changes for 2026 and the mistakes you need to sidestep. The most important updates are the new payment amounts and income thresholds. As we've seen, OAS and GIS payments have been bumped up to reflect inflation, and the income cutoffs for both the GIS and the OAS clawback have been adjusted too. But knowing the numbers is only half the battle. Avoiding these three common mistakes is what will really protect your benefits. Mistake number 1, not filing your taxes on time. This is the single biggest error you can make. Service Canada automatically checks if you're eligible for GIS each year based on your tax return. If you don't file or you file late, your GIS payments will stop. It's that simple. You have to file your taxes every single year, even if you have zero income to report. Mistake number 2, misunderstanding what counts as income. Just like in our example with David, not all money is created equal in the eyes of the government. Withdrawals from an RRSP or a RRIF count as income and will lower your GIS. But money you take out of a TFSA does not count at all. Capital gains from selling investments also count. Getting this right is everything for managing your cash flow without accidentally clawing back your own benefits. Mistake number 3, not telling Service Canada about a drop in income. Did you just retire? Did you stop working that part-time job? If your income has dropped a lot from one year to the next, you don't have to wait a whole year for your GIS payments to catch up. You can ask Service Canada to calculate your GIS based on your estimated current year's income instead of last year's. This is done by filling out the Request for Reassessment of GIS form, also known as Form ISP 3041. This one step can get you the benefits you deserve months sooner. How CPP fits in. While much of the discussion around 2026 focuses on OAS and GIS, the Canada Pension Plan is a foundational part of the entire retirement income system and cannot be looked at in isolation. Under the ongoing CPP enhancement, benefit levels are steadily increasing, with the long-term target now set at replacing approximately 33.3% of a worker's average career earnings, compared to the previous 25% replacement rate. For Canadians who contributed consistently and earned at or above the average wage, This means higher monthly CPP payments in retirement and a stronger base of guaranteed income that is protected from market fluctuations. For future retirees, CPP is becoming a more meaningful portion of total retirement income than it was in the past, especially as private pensions become less common. At the same time, these higher CPP payments directly affect how much a senior can receive from income-tested benefits, like the Guaranteed Income Supplement. Every dollar of CPP counts as income when Service Canada calculates GIS eligibility, meaning an increase in CPP will usually result in a reduction in GIS. This creates a delicate balancing act. While CPP increases improve financial security, they can also reduce access to needs-based support. That's why retirement planning in 2026 requires a full-picture approach. Seniors must consider how CPP, OAS, GIS, and personal savings work together, not separately. The goal isn't to maximize one benefit at the expense of another, but to structure total income in a way that minimizes clawbacks, preserves eligibility, and delivers the highest possible net monthly income over the long term. Let's bring everything together in a clear and practical way. The combined payment of up to $1,850 per month is real, but it is not automatic and not available to everyone. It is specifically reserved for low-income Canadian seniors who qualify for the Maximum Old Age Security, OAS, and the Maximum Guaranteed Income Supplement, GIS, at the same time. The most important factor deciding whether you receive this full amount is how your annual income is calculated under the 2026 rules. This includes income from pensions, employment, withdrawals from registered and non-registered accounts, and even certain government benefits. A small misunderstanding, such as assuming some income doesn't count, can be enough to reduce or completely eliminate GIS, which is why income awareness is the foundation of protecting your retirement benefits. To stay in control, your first priority should be your My Service Canada account, which acts as your personal hub for all federal retirement benefits. Logging in regularly allows you to monitor your OAS, CPP, and GIS payments in real time and quickly spot any unexpected changes. Make sure your mailing address, phone number, and direct deposit details are accurate and up to date, because missed letters or outdated banking information are common reasons payments are delayed or stopped. This is also where Service Canada posts important notices, requests for information, or confirmation letters. Ignoring these alerts can lead to benefit interruptions that take months to resolve. Finally, compliance and timing are critical. Filing your income tax return every year is non-negotiable, even if your income is very low or you believe nothing has changed. GIS eligibility is recalculated annually using your tax return, and if no return is filed, GIS payments can be suspended automatically. In addition, if your income has recently dropped or is about to drop due to retirement, reduced hours, illness, or the loss of a spouse, you should act immediately. Contact Service Canada and ask about having your GIS calculated based on your current or estimated income for the year instead of last year's higher earnings. Taking this step early can prevent long gaps in payments and help ensure you receive every dollar you are legally entitled to under the 2026 retirement rules. Canadian retirement rules do not stay the same. OAS, CPP, and GIS amounts are adjusted regularly due to inflation, income thresholds, and federal policy updates, and even small changes can have a direct impact on your monthly payments. The information in this video is provided for educational purposes only and reflects the rules and guidelines available at the time of recording. Because every retirement situation is different, you should always verify details with Service Canada or a qualified financial professional before making decisions that affect your benefits. If you want to stay protected from missed updates, payment surprises, or sudden rule changes, subscribe to this channel now. I publish clear, timely breakdowns of Canada's retirement benefits so you can understand what's changing, why it matters, and how it affects your money without confusing jargon or misinformation. My goal is to help Canadian seniors and near retirees make informed decisions and navigate retirement with confidence and clarity. Before you go, make sure you're subscribed and notifications are turned on so you never miss an update that could impact your financial security. New changes can happen without warning, and staying informed is one of the simplest ways to protect your income in retirement. Thank you for watching, and I'll see you in the next update.